Salesforce shares jumping after revealing these ambitious new revenue targets and AI plans. Our Seema Mody back at Post 9 with some of those details and a lot of chatter about double-digit growth coming back.
Yeah, ambitious but achievable. That was the message from executives at Salesforce when they revealed that revenue target for 2030 of $60 billion. That is higher than the average Wall Street consensus of $58.4 billion. Perhaps more significant was what Salesforce CEO Mark Benioff said last night on the Investor Day call around the company's AI agents, where he said bookings growth is improving, a strong uptick in the month of September, and a more flexible pricing model, which they expect to drive adoption. Bank of America analyst this morning writing that commentary suggests that growth has bottomed and is likely to re-accelerate from here. And then you have analysts from Goldman Sachs saying that the company's operating model can now yield rising margins while still allowing them to preserve innovation. Till now, as we know, Salesforce has struggled to articulate how it's going to monetize artificial intelligence agents. We still have to wait a while. Second half of 2026 is when that technology is expected to go from proof of concept to entering production. But this crucial update, guys, from management is giving investors some hope and easing anxiety with the shares trading higher, but still down about 25% this year.
Yeah, stay right there, Seema, because we want to talk a bit about Oracle as well. I know you were at AI World, and that's been going on for 4 days. I was at the very beginning of it, of course. AI at the center of so much of what Oracle is doing, and the money it's putting out right now to prepare for that world, to outfit all those data centers, of course, has resulted in negative free cash flow, going to spend as much as $35 billion in CapEx this year, and certainly questions around margins. And that's something it's anticipated to answer, at least with more specificity, later today when analysts will be in attendance at AI World for an investor day that sort of caps off the week's festivities. I did ask the company's two CEOs about the margin opportunity and the profitability of all this money that they will be spending to build data centers and the like.
If we didn't think this was going to be a wonderfully profitable business, we wouldn't be in the business. I mean, obviously, there are some upfront investments, right? If you're going to build a brand new apartment building and you've got the first couple people that move in, you still have to pay for the whole building to be able to build that building. The difference is, though, this building is sold out. Right. So this building is sold out and people are lined up to move in. This is not a field of dreams scenario where we're building things hoping people will come. Demand is not the problem. Supply still remains the problem.
I know you're going to be covering the Analyst Day. You're obviously out there as well in Vegas.
Yeah, and I think after the Artificial Intelligence Conference, AI World for Oracle, the biggest moment for this company, unveiling these new products. Now the question is the return on investment. And I think today the goal or the hope is that they'll be able to provide more clarity specifically around their Oracle Cloud business, especially after that report the last week that suggested the margins for its cloud business will be, quote, razor thin. Here's the deal. We learned on the earnings call that they had this massive cloud backlog. They also said that its cloud infrastructure revenue will go from $10 billion last year to $144 billion by 2030. So clearly, acceleration in revenue, that's not the issue. The concern is what does the longer-term profitability picture look like? And that's where investors want more clarity. It's very interesting to see when you have these two massive software companies from Salesforce, where the concern is around revenue growth. But for Oracle, that's not an issue. We know there's demand. You have that $300 billion deal with OpenAI, clients like xAI, Anthropic, among others. The question is just what does it lead to in terms of return on investment over time? Because they continue to spend a massive amount of capital on high-performance AI chips and now building out these superclusters and data centers, which they did go into detail at the conference as well.
Yeah, I mean, $300 billion of which is going to be coming conceivably from OpenAI to pay for its access to what they will be building. But you heard Cecilia saying it's not a field of dreams. You know, it's not just building it and hoping they'll come. They believe the demand is already there.
And that seems to be playing out in the market as well. When you look at the price action within technology, we've had this record-breaking rally in technology, yet Salesforce has sat out. It's down 25%. Oracle, the best-performing mega-cap tech stock, up nearly 80%. Investors are sold that Larry Ellison, the founder and chairman, that he will be able to lean into AI and double down on this opportunity and that the profits will come. And that's a point he made during his keynote as well, that they have no choice but to transform the company that started in 1977 as a database back-end office company to one that now will be at the forefront of AI and the third largest hyperscaler now, given all the investments they're making. But software as a whole hasn't stood up as well, hasn't performed as well as broader tech, because there is this concern that generative AI and agentic AI will eat into profits for some of these companies.
Yeah, hard to pick the winners. We're only in the third inning, though, is the good news, according to the Treasury Secretary, when it comes to AI investment and this kind of cycle. Charlie Scharf, CEO of Wells Fargo, said we're not even at the third inning yet. I mean, this is just very early days. Yeah. In the investment and deployment.
I guess.
I guess.
Those were great interviews, Sarah.
Well, thank
Love
you.
that.
Thank you.